We're in a very interesting environment, and it's caused by monetary instability around the world. We see what happened because of COVID. We have to get this thing under control. And if by the end of the year we stabilize around 0% year over year growth, this line will drop toward 2 to 3%, which, as you can see, we've only seen once. It was in the 90s. And, after that, all hell broke loose around the world.
In today's video, Cathie Wood discusses everything happening in the rapidly changing and still massive Bitcoin ecosystem. What is this Bitcoin having represent as symbolic of Bitcoin as a monetary system? So without wasting any time, let's dive into the video.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because what they're saying is it's really been quite disruptive, and increasingly so in the last few years. So this idea of, a global, digital, decentralized, private, no government oversight, rules-based monetary system is a pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And I was, wow, this is pretty interesting. This could be transformative. And I said, Art, how big could this be? Back when it was $250. And he said, well, how big is the U.S. monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer.
Ethereum co-founder Joseph Lubin believes the United States Securities and Exchange Commission is intentionally hindering innovation, which threatens the country's existing financial landscape. Speaking at Phily's Crypto and Digital Assets Summit in London, Lubin unpacked ConsenSys's decision to sue the SEC. After receiving a WELS notice from the U.S. securities regulator, the SEC appears to have reclassified as a security without telling anybody that that's the case. They are going about a strategic series of enforcement actions rather than open discourse and clear rulemaking. Lubin said the CEO of ConsenSys, which developed the MetaMask wallet, said the enforcement actions intend to create fear, uncertainty, and doubt for the cryptocurrency industry in an attempt to paralyze and force the company offshore. Lubin said the firm's counteraction against the SEC is aimed at getting more clarity from U.S. courts, considering that the Commodity Futures Trading Commission had previously classified Ether as a commodity. The Constant CEO also highlighted the upcoming deadline for the SEC to issue a decision over the approval of other spot exchange-traded funds, ETF, as a driving force behind the regulator's renewed enforcement action against the Ethereum. We believe that there's a flurry of activity designed to enable them to say that their action isn't capricious in the very likely event that they denied the other spot ETF. Lubin explained. Lubin said the SEC had noticed how much capital had flowed into the ecosystem following the approval of spot Bitcoin ETF, I think they're concerned that so much attention and capital will flow to our ecosystem, considering it is improving enormously in terms of scalability and usability. Lubin also speculated that the prospect of the banking industry's customers moving assets into digital forms using decentralized finance constructs could scare many banks and other financial institutions. The SEC probably doesn't want to see a wave of innovation that will really transform the landscape, he said.
And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper, and we concluded yes. Could it? Is it ringing the bell for a new asset class? Yes, but in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. But the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, gold is a 5,000-year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments. I think in the and Yassine, you can corroborate this, but in the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know, how much is the net new, Yassine? I don't know, it's billions have come in. And these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, oh, with the halving, that means Bitcoin, the Bitcoin price is going up, because they saw it in 2017. There was a little bit of a wobble before it happened in 2021. So there are expectations built into the financial market. This is a great thing, and Bitcoin's going to go up because of it. But we have a whole new layer or kind of player in the Bitcoin ETF, and it'll be interesting to see their reactions if this doesn't go as planned. Oh, halving, and then it goes up.
Bitcoin aside, the cryptocurrency market could find its local bottom in June, marking the start of the next altcoin bull cycle. According to market analysts, based on historical chart patterns, altcoins can be set to find their local price bottom around the beginning of June. According to popular crypto analyst Rect Capital, who wrote in a made ex post, altcoins are following the plan perfectly. Altcoins bottomed in early February. Altcoins sold off around the BTC, having altcoins to bottom early summer. The altcoin market took a beating in the past month. The market cap of all coins, excluding the 10 largest cryptocurrencies, fell over 21% during the previous month to $265 billion. The empty money supply estimates all cash and short-term bank deposits across the United States. As the money supply in the world's largest economy increases, part of the new supply could find its way into altcoins and other coins, contributing to the beginning of the alt session.